Hello, good morning. Welcome to the Joy Business Report. Coming up, investors enroll banks unhappy with Bank of Ghana directive to withhold dividend payment due to domestic debt exchange program as some look elsewhere. Also, Ghana Stock Exchange records 14.9% return for investors in city term in the first half of the year, but registers negative 10% return in dollar term in the first half of the year. Also, Government and Electricity Company of Ghana advised to be transparent in their dealings with the independent power producers to help reduce the energy sector debt. Details coming up. Thanks for being with us. My name is Darryl Kwao. First up, shareholders of rural banks have expressed dissatisfaction with a directive by the Bank of Ghana to hold payment of dividends. The Bank of Ghana's directive is due to the current economic challenges and the impact of the domestic debt exchange program. Executive Director at the Association of Rural Banks, Comfort, also reveals shareholders are reluctant to invest more due to the present order.
Any bank that has to pay dividends will have to write for approval from Bank of Ghana, which they have in that stream. So you could see the shareholders are really not very happy because they were expecting that as long as the bank has been able to make some kind of profit, they should be able to get their dividends. But it's not so. So it's not easy today for us. We are trying to calm them down for the fact that when things are good, they will have their dividends.
You heard the Comfort Osu, who is Executive Director of the Association of Rural Banks. The Ghana Stock Exchange recorded a 14.9% return in city term for investors in the first half of this year, but it registered negative 10% return for investors in dollar term. Here's more in this Business Desk report.
After a challenging economic time in 2022, resulting in a debt restructuring, the Ghana Stock Exchange is bouncing back to its previous height. This follows improved market sentiments due to the International Monetary Fund support program. In TD term, the Accra Bourse was the fourth best performing stock market in Africa out of 15 stock markets in the first half of this year. However, in dollar term, it's placed 11th. Its market capitalization also shot up to 69.59 billion cedis as of 30th June 2023. So far, the non-banking stocks have been leading the gains on the equity market. The financial stock index, however, lost 17% in value in the first 6 months of this year. This was primarily due to the domestic debt exchange program, which has impacted their balance sheets. 8 of the financial stocks have consequently lost market value. Meanwhile, the best performing stock in the first 6 months of this year was Benso Oil Palm Plantation. It was followed by Total Energies and MTN Ghana.
We can now hear next from Head of Trading at Republic Securities, Patrick Edem-Agama, who is urging the public to invest in stocks that would pay dividends promptly going into the second half of the year.
I think we should look closely at stocks that pay dividends. It's good to know that most Ghanaian investors focus on dividend payments. So look at stocks that will pay dividends. We see some stocks like MTN that have in the past paid dividend twice in a year. So they can be able to pay interim dividends this year and pay the final the next year. So you can look towards dividend stocks and that should be it. But in all, you should speak to your broker about your investment objectives.
Head of Trading at Republic Securities, Patrick Edem-Agama. Away from the stock market, ranking member of Mines and Energy Committee in Parliament, John Jinapo, is asking government and the Electricity Company of Ghana to be transparent in their dealings with independent power producers. This comes after the independent power producers announced the suspension of a planned shutdown on the 1st of July. According to him, the ECG should be proactive and focus on paying debt within the value chain. He was speaking on PM Express on Joy News.
Transparency, that's all. Mr. Dubik and his team, ECG, their main focus should be that power bought and sold, they are able to pay for you. That is it. The rest, leave it for policymakers. Okay. If the policymaker says, don't charge for reserve margin, that shouldn't be your headache. Your headache as ECG MP is that I bought X amount of power, I sold Y amount of power. Try and pay those in the value chain. Yep. If there's anything in terms of reserve margin or whatever, we, the policymakers, would have to deal with that. And that's what Dr. Stimantel talked about.
John Junakpo is ranking member on the Mines and Energy Committee of Parliament. We have some news on the city for you this morning. The local currency is expected to continue its stability against the US dollar and other major currencies this week. This is expected to be supported by improved foreign exchange support from the Bank of Ghana. Here's more in this report.
The cedi recorded some gains last week across the major trading currencies in the retail market. The central bank provided about $25 million to bolster liquidity in the FX market. Consequently, the cedi appreciated 0.64% last week against the dollar. It also gained in value against the euro and the pound. It has benefited immensely from the International Monetary Fund program, boosting investor confidence. The local currency ended the first half of this year with a better performance than the same period last year. According to Bloomberg, the cedi lost about 11.21% to the US dollar, yet was still classified among African currencies with worst spot returns.
Let's check the currency market for you this morning. The dollar going for 11 cedis 68 pesos on the forex or retail market. The pound going for 14 cedis 90 pesos, and the euro selling at 12 cedis 53 pesos. Now, banking consultant Dr. Richmond Etuaine is doubtful Africa can get its own credit rating agency. According to him, African countries have not been able to manage their respective economies satisfactorily despite the abundant resources endowed with. Therefore, a call for an African rating agency is unwarranted. His comment follows assertions by some African governments that credit rating agencies have shown bias against them, thus affecting their ability to borrow on the international capital market. He tells Joy Business that is not the case.
Those who are arguing that, I don't think Africans can even set their own benchmark for credit rating. Where are they going to get their money from? It is impossible because the way we have run our economy, we have all the resources. Go to Congo DR, go to Angola. We the biggest oil producer now passing Nigeria. But have we been able to develop our own capacity to say that Africans are capable of ruling themselves or funding themselves? I doubt very much.
You heard banking consultant Dr. Richmond Etuaine. Now, disparity in compensation by employers is badly affecting productivity in many sectors of the economy. This is a session by the Chief Executive of the Chartered Institute of Human Resource Management, Ebenezer Agbeto. According to him, the situation needs to be addressed as many employees fail to deliver due to the lack of transparency in payments and the inability of employers to pay according to industry structure. The CEO was speaking at the launch of an HR Outlook and Benchmark survey to be conducted with KPMG and other partners across the country.
For sure, where employees are not properly motivated in terms of salaries or other benefits, naturally they will feel badly done. Hence, giving out their best becomes a challenge. So therefore, if authentic information on salaries or benefits are made available industry per industry, and I'm really emphasizing on this because every industry varies from the other, and what they can afford also varies from one place to the other. So when this information are made available, then it will have to be compelled to look at it and see to it that at least you must be seen to be paying the bare minimum, whereby employees will know that for nothing at all, our employer is paying us the bare minimum. And if we do better, then there's a high chance that we'll even get higher increases in benefits and salaries.
Chief Executive of the Chartered Institute of Human Resource Management, Ebenezer Agbeto. Now, today on Investor Eye, always pay attention to suspicious investment links purporting to have come from a regulator in the financial sector. You can always verify email addresses sent to you for investment purposes from the Bank of Ghana or the Securities and Exchange Commission before you take an action. Joseph Kokwe is lead in charge of cybersecurity at the E-Crime Bureau, and he gives some advice.
Look at the sender of the mail. Look at the body of the email, right? And the sender, if it's emails, you look at the sender, not just the name, but the email address. Because someone will say that they are sending you a message from Bank of Ghana or your Ghana Commercial Bank. But if you look at the email address, it says george.frank@bankofghanaabcc.net.